the trader you become. What follow the process really means. Follow the process. It's probably one of the most common pieces of advice in trading. Almost every trader has heard it. Almost every trading book mentions it. Almost every mentor says it. But what does it actually mean? Many traders believe following the process simply means entering a trade according to their strategy. Professional traders often see it very differently. Following the process doesn't begin with the entry, and it doesn't end with the exit. It's a series of decisions made before, during, and after every trade. Perhaps that's why so many traders struggle. Not because they don't have a process, but because they only think about the process while they're in the trade. Professional traders understand something different. The process begins before the market opens. It continues while the trade is active. And it doesn't end until the trading day is over. In many ways, becoming a consistent trader isn't about finding a better strategy. It's about learning to protect the process. Because every mistake usually begins the same way. The process is quietly abandoned. Sometimes it happens before the trade, sometimes during the trade, sometimes after the trade. But almost every costly mistake begins with one small decision. A decision to leave the process. Chapter 1. The process begins before the trade. Many traders believe the process begins when the setup appears. Professional traders know it begins much earlier. It begins with preparation, preparing before the market opens, knowing exactly what qualifies as a setup, knowing what does not, knowing the trading window, knowing the position size, knowing where the stop belongs, knowing how the trade will be managed. Professional traders don't wait until they're emotional to make important decisions. They make as many decisions as possible before emotions arrive. Because decisions made while calm are usually better than decisions made under pressure. Waiting is part of the process. Doing nothing is part of the process. Ignoring random opportunities is part of the process. And perhaps that's one of the hardest lessons in trading, because waiting often feels unproductive. The market is moving, candles keep forming, charts keep changing. Other traders appear to be making money. The mind quietly begins asking, maybe this is close enough. Maybe I don't have to wait. Maybe I'll miss today's move. Professional traders understand something different. Waiting isn't the absence of trading. Waiting is part of trading. Every trade they choose not to take is protecting capital, emotional energy, and decision quality for the trade they actually want. Because saying no to the wrong trade is often what makes it possible to say yes to the right one. The process doesn't begin with action. It often begins with patience. Chapter 2. The process continues during the trade. Many traders believe the difficult part begins after they enter. In many ways, they're right. Because once the trade begins, emotions begin. Fear, greed, hope, the desire to avoid a loss, the desire to make more, the desire to be right. This is where many traders quietly stop following their process. Not all at once, one small negotiation at a time. Maybe move the stop. Maybe take profit early. Maybe give it one more candle. Maybe widen the stop. Maybe add to the position. Maybe today's different. The market isn't negotiating. The market simply moves. The negotiation happens inside the trader. Professional traders continually return to one simple question. What does my process say? Not, what do I hope? Not, what do I feel? Not, what if this time is different? Simply, what does my process say? If the process says leave the stop where it is, they leave it. If the process says trail the stop, they trail it. If the process says take partial profits, they take them. If the process says exit, they exit. Their job isn't to negotiate with every candle. Their job isn't to predict every movement. Their job is to execute the process consistently. Because the purpose of the process isn't only to improve entries or improve exits, it's to reduce emotional decision-making while the trade is unfolding. A predetermined stop-loss protects the amount of risk the trader accepted before entering. A predetermined trailing stop protects profits as the trade develops. But perhaps most importantly, it protects the trader from constantly asking, should I exit now? Should I hold longer? Should I give it one more candle? Professional traders understand that a management system isn't designed to remove uncertainty. It's designed to remove unnecessary negotiation. Because every decision that has already been made before emotions arrive is one less emotional decision that has to be made during the trade. And over hundreds of trades, that consistency often becomes far more valuable than making one brilliant decision in a single trade. Chapter 3: Knowing when the process is complete. Many traders believe following the process ends when they exit the trade. Professional traders often know that's only part of it. Perhaps one of the hardest parts of following the process is recognizing when the process is complete. The original setup appeared, the entry was taken, the risk was accepted, the trade was managed, the exit followed the plan. The process has been completed. But then something happens. The market keeps moving. The trend continues. Another candle appears. The trader starts thinking, maybe there's one more move. Maybe I can capture the last part. Maybe I should get back in. This temptation is surprisingly common, not because the trader missed the move, but because they don't want to leave any profit behind. The goal quietly changes. Instead of executing the original process, the goal becomes capturing every remaining dollar the market might offer. Professional traders understand that these are two completely different goals. Their edge was never catching every move. Their edge was executing their process. Sometimes the original trade has already accomplished exactly what it was supposed to accomplish. The process is complete. Re-entering isn't automatically wrong. But a new trade should only exist if a new process exists, a new high-quality setup, a new acceptable risk, a new reason for entering, not simply because the market is still moving. Many traders get trapped near the end of a move because they're no longer trading their original edge. They're trying to squeeze the final part of a trend that their process never asked them to trade. Professional traders understand something important. Not every remaining dollar belongs to them. Sometimes protecting the process means accepting that the work is finished, even while the market continues. Chapter 4: The process becomes the scorecard. Most traders measure the day by one question. Did I make money? Professional traders often measure the day differently. Did I follow my process? Those are two completely different scorecards. A trader can have a profitable day while breaking every rule. A trader can have a losing day while executing every rule correctly. Financially, those days may look very different. Professionally, they tell a completely different story. Imagine two traders, both lose exactly the same amount. One followed the process from beginning to end, waited patiently, entered at the planned location, accepted the initial risk, managed the trade according to the plan, accepted the stop, finished the day. The other trader moved the stop, added to the position, took random entries, overtraded, ignored the trading window, eventually lost the same amount. The P&L looks identical, but the two traders are not in the same place. One strengthened the process. The other weakened it. Professional traders understand that today's profit doesn't always measure today's progress. Sometimes the greatest progress happens on a losing day because the process was protected. Over hundreds and thousands of trades, that's what creates consistency. Not judging every day by the outcome, but judging every day by the quality of execution. Chapter 5. Returning to the process. Perhaps this is one of the biggest differences between struggling traders and professional traders. Professional traders are not perfect. They still experience fear, greed, frustration, temptation. They still feel the urge to move a stop, take one more trade, recover a loss, capture one more move. The difference isn't that those thoughts disappear. The difference is what happens next. They return to the process again and again and again. When emotions appear, they ask, "What does my process say?" When the market tempts them, they ask, "What does my process say?" When they take a loss, they ask, "What does my process say?" The process becomes the place they return to whenever emotions try to take control, because they understand something many traders eventually discover. Consistency isn't built by never becoming emotional. Consistency is built by returning to the process before emotions make the next decision. Every time they return to the process, they strengthen self-reliability. Every time they negotiate with the process, they weaken it. Professional traders aren't trying to become perfect. They're trying to become reliable. Reliable enough to execute the same good process tomorrow and the day after that. Regardless of today's outcome. Final thoughts. Perhaps that's what follow the process really means. It isn't one decision. It's hundreds of small decisions. Before the trade, during the trade, after the trade. One decision at a time. Many traders believe becoming successful means finding a better setup, or becoming more disciplined, or predicting the market more accurately. Professional traders often see it differently. The process is the job. Preparing is part of the process. Waiting is part of the process. Entering is part of the process. Accepting risk is part of the process. Managing the trade is part of the process. Exiting is part of the process. Not re-entering is part of the process. Every one of those decisions protects something valuable. The setup protects clarity. The entry protects psychology. The stop loss protects accepted risk. The management protects consistency. The rules protect decision quality. And together, the process protects the trader, because every mistake usually begins the same way. The process is abandoned, and every step toward consistency begins the same way, returning to the process, again and again, trade after trade, day after day, because trading is not only a journey of learning the markets, it's also a journey of learning to trust ourselves enough to execute the same good process over and over again. If this video resonated with you, let me know in the comments. What part of your process has made the biggest difference in your trading? And if you know another trader who might benefit from this video, consider sharing it with them. And if you'd like more explorations of trading psychology, discipline, and the inner side of trading, consider subscribing. Because perhaps becoming a professional trader isn't about becoming someone who always knows what the market will do. Perhaps it's becoming someone who can be trusted to follow their process, regardless of what the market does.